Capital gains tax is one of the biggest killers of Australian property investing returns, and it can also be the killer of your early retirement dreams. So in this video, I'm going to explain to you the 7 perfectly legal ways you can reduce your tax or eliminate it completely. I'll share with you a story that I've actually sold a property in just 7 months, and I made $105,000 and I paid 0 capital gains tax, no tax at all on that particular property. And I'll tell you exactly how I do that by the end of this video. So make sure you watch all the way to the end, subscribe and like this video if you like what you're seeing, and let's get right into it. Strategy number 1 is your capital gains 50% discount. Now this is something that a lot of people don't know about, and it's basically if you hold an investment property for over 12 months, your capital gains tax that you were going to pay is reduced by 50%. Now, I suggest that you talk to your accountant about all these strategies as well, just to make sure that you comply with all the ATO requirements. But that is one of the best strategies, is to hold your property at least 12 months, and then your capital gains tax will automatically reduce by 50%. That is strategy number 1. So make sure you use that one. Now, it's important to clarify that 50% discount only applies to individuals and trust. It does not comply if you buy your property in a company. So remember that you've got to buy it as an individual or a trust to actually qualify for that 50% discount. And the 12-month period actually starts from the contract date to the contract date, not when you actually settle the property or settle the sale or settle the purchase of that property. So make sure you're also aware of that one. So the key takeaway from this is that if you hold your property for just 12 months and 1 day, you'll save yourself 50% on tax. So make sure that you're aware of the timelines when you're buying and selling your properties, your investment properties. Now, strategy number 2 is your main residence exemption. Now, once again, a lot of people already know this one, but if you don't, if it's your primary residence where you're living, then you don't pay any capital gains tax on that property at all, 0 tax. Now, there is some restrictions once again, so make sure that you talk to your accountant. But if you live in the residence as your primary residence, then it is actually you can get a full 100% tax exemption. If you own multiple properties, as you hopefully you will be doing, then it's important to plan, which one is going to be your principal place of residence, and talk to your accountant about it. You can save a lot of tax by actually consulting to your accountant on this particular one. Used correctly, this can be your most tax-effective asset. Strategy number 3 is increasing your cost base. Now, a lot of the things to do with the purchase of your property, depreciation, legal fees, conveyancing fees, rates, right? They can be deducted of the capital gains tax that you're going to have to pay when you're selling the property. So make sure that you keep very careful record and talk to your accountant about how many tax deductions you can actually have. And if you already claimed the costs in 1 year, you can't obviously claim it as an exemption when you sell your property off your capital gains tax. Now, the key takeaway here is actually that very good record keeping is important to save you tax when you're selling that property. So make sure that you document everything to do with that property very, very carefully. Our strategy number 4 is to use your capital losses in other areas of your income to actually offset against the capital gains of selling your home. So it's important when you actually sell your home, but you can offset your capital losses from previous years or create it intentionally for the current year when you're selling your property. Talk to your accountant about how you can minimize your capital gains tax using these offsets against your other losses that you might have had. Strategy number 5 is the 6-year rule or the temporary absence rule. So Australians can actually still claim the capital gains tax deduction on a primary residence for up to 6 years, even if they're not living in the home. So in other words, if you lived in the home for a period of time and then you move out for up to 6 years, you can still claim that as your primary residence if you don't have another home that you're claiming as your primary source of residence. So make sure that once again you consult your accountant, because this can be relevant if you have to move states or something, you're still keeping your primary property, and it's best to work out which property is going to make you the most amount of money and make that one your primary residence. So I've done that several times in my years. I've had over 28 properties that I bought, and I've been investing for over 40 years, and I can tell you this is a strategy that absolutely works, and I've done it several times. Right, your capital gains tax in the year in which it is realized, which is the contract date when you sell the property, will be added or offset to the income that you made in that particular year. So ideally you want to sell the property when you've actually made the least amount of money in your other areas of income that you might have had, right? And conversely, if you've got a loss, right, in that property, then you want to sell that property in a year when you've had the most actual income in your other sources of income that you're making from your salary or your business. Right? So that's important. When you sell your property is critical from the point of view of either reducing or increasing. The capital gains tax is assessed on the year of the contract, on the date of the contract, not the actual date of the settlement. So if the contract is done in December in 2025 and then you settle in 2026, right, the financial year, then you're going to be actually taxed on the 2025 tax return, not 2026 when you actually got the money, right, for the property. So be aware of that one as well. And finally, number 7, investing through your self-managed super fund. Look, if you don't invest in property in your self-managed super fund, if you're able to, then you seriously are costing yourself hundreds of thousands of dollars. I've just sold a property for $105,000. I only owned it for 7 months and I paid 0 tax on it. I paid 0 tax on the income and 0 tax on the capital gains because I bought it in my self-managed super fund. Now I'm at a retirement age, so I get 0 tax on that property. However, if you're under the retirement age threshold, then still in investing in your super fund, your basic capital gains tax is only 15%. Right after you've owned the property for 12 months, it's only 10%. And once you reach my age, then you get 0% on your capital gains. So it is an absolutely critical way to start building your wealth is to invest through your self-managed super fund. I've done a whole video on investing in your super fund where I've interviewed my accountant who I've been using for over 25 years and who's fantastic at maximizing any tax deductions I've had to do. So you can watch that one. You can contact him or contact me. I'll give you his details if you want to talk to him. But self-managed super fund is seriously one of the best ways to invest in property. You will retire much, much sooner if you're only paying 10% tax on your income also, or 15% tax on your income that you're getting into the super fund, as opposed to the, up to 47% of the income tax that you get when you're getting income outside of your super fund. So it is critical in actually building momentum inside your super fund for your retirement, because your money accumulates a lot quicker because you're not giving away so much to the government. It's also important to remember, right, that if you want to retire sooner, right, property is the best way to invest your super fund money into, because if you got in a super fund, you're getting a return every year. Let's say it's 10%, fantastic. But a property in Australia, a well-placed property with a good positive cash flow income will give you positive cash flow income every year of anything up to 8, even 10%. We've got properties that can do that. And then you're getting the capital gains on top of it. So the real effective return is anywhere from 15 to 20% per year on your money, right? On the money you're investing and also the money that you borrowed. So it's a fantastic way to grow your wealth. So make sure that you invest in your super fund. It's the one lesson I'll give you. It's the last one on this series, but it's the most important one. Now make sure you watch some of my other videos, like this video, and subscribe to my channel, and I'll share a lot more strategy with you, where to find the best properties, which types of properties will give you the best returns, the best capital growth, and a lot of other strategies to make you a successful investor like I've been for the last 40 years and 28 properties that I'm invested in. I'll see you soon. Good day. If you're looking to invest in a high income property in the next 3 to 12 months, and whether that's buying an existing property, building a new one from existing plans, or developing land you may already own, then my team and I at Sun Property Institute would love to help you. What we're offering is a free one-on-one strategy session where we'll map out exactly where you are now, right, and where you want to be, and outline the best possible high return and capital growth property options to help you get there faster. Some of the things we'll walk you through is like which property types and strategies are best for income, tax benefits, capital growth, paying your mortgage faster, the best cities, suburbs, areas for future capital growth and returns, and how you can build a property portfolio that could retire you within 10 to 15 years, starting from as little as $70,000 investment. Now, just go to www.Sun Property Institute to book that session and just click the button on that website to get your free strategy session, or there's a link near this video. If there's a link there, then just click that link. And look at our website. You can also get a copy of a download of some of the books you can see behind me that I have written on property investing, and they're also there on our website. Now, you can take all that information and look, you can run with it and do it all on your own. Or if you like what you see and there is a fit between us, then we can work together with you to help you reach your goals. And either way, you'll learn how to invest smarter with less risk and build your financial freedom with more confidence. So book that call now and book yourself in that session. And either way, best of investing success.